Welcome to 5 Minutes with NRT Project Accounting. Today's session covers period end and revenue calculation. We're going to go ahead and jump over to our project status report to confirm the costs that we have incurred for this month. I've already booked the costs, so I just want you to see what we have in here to process through for revenue. These are direct costs, and again, you'll notice we have the fiscal year and the period. It's important that we are in the correct fiscal year and period when we're running these reports, running our indirect rates and running our revenue. I'll enlarge this a bit for you. And so we have some costs incurred in the current period. This is our PSR. This is not including budgets and variances. It's just a straight up incurred cost. This is our cost plus contract. If we go over here, we can see we also have fixed price and time and material costs as well. The two projects that I'm going to generate the revenue for will be the T&M and the cost plus contract. So we see we have our cost there, and then we'll go to period end and process it. Since there's a cost plus involved, we will be calculating the indirect rates. So the first thing we do is we will calculate our indirect pools. And this is a service center prompt that we're seeing here, of which I don't have any cost to allocate. I'll go ahead and generate the indirect pool calculation report. This is generating the actual rates through the current period, looking at all incurred costs that have been booked. There's also a report underneath here when I'm done running this report that we have an account reconciliation report also in period end. So if you're using both systems to do incurred costs, that is, you're doing some costs that are being booked in QuickBooks and some costs that are being booked in project accounting, you can run that account reconciliation report to make sure all the accounts are trued up before you actually generate these reports that you see here. So here we're calculating our rates, and this is just basically all our pool rates, our fringe overhead G&A, and material handling, if we have any material handling involved with that. Since we also have a cost plus, we're going to update this information. We would generate fee. We can have fee where you have fee on hours, or you have award fee, or you have some percentage being applied to your incurred costs. That applies to our cost plus type contract, and there's also a time and material contract as well, where fee can be applied or G&A can be applied to ODCs. So we're calculating our fee allocation. And once we're done with this, we will be able to generate the revenue for the current period. And this is showing our cost plus contract. Obviously, if you had more cost plus contracts, it would be showing those as well. And what fee is being generated and posted for this period. As you can see, we have a current period, year to date. And then what is allowed, we have a ceiling. So if you have funded or contract ceilings, it's just showing you what will be allowed or not allowed to be incurred. Once we update this, fee will also be posted, and this is all done within the project accounting. Nothing's posted to QuickBooks yet. So when we get into the revenue calculation, we would just run our revenue journal. And when we click on this, we can select either specific projects or types of projects. In this case, I'm just going to run it for all projects. And this will bring in the revenue calculations that are going to be posted to project accounting and also to QuickBooks. So this is actually going to generate a QuickBooks journal entry when it's finished. And this is what we see for our revenue generation for this current period. This is our cost plus, where we see our current period. You'll see we're using actual rates that are being applied for the buildup, our incurred cost, our fee, and then the revenue that's going to be booked for this period. You'll see on the bottom here that we have the accounts that are going to actually have the posting done to it. So when we're done, we're going to go over into QuickBooks. We're going to actually see this journal entry. And then we also can look at our time and material as well. And this information is going to be posted to project accounting for our PSRs, our project status reporting, as well as to QuickBooks. So when we're done, and if we agree with everything we see on our report, we'll go ahead and we'll close the report. You would print this out, and we say yes. And you can see now it's asking, do we want to generate a QuickBooks journal entry? And we can look at the journal entry before it posts into QuickBooks. And we can see we have the postings coming in for the cost plus contract, which is on top, and you can see the source and the posting for the T&M project that's coming in down here. And we'll go ahead and we'll close this out and we say yes. And we can then go over into QuickBooks and we can see our journal entries as they now reside in the GL. Now keep in mind, this is not invoicing. Invoicing will actually be a separate process within project accounting. So the revenue and the invoicing can be separate. They can also be set up to equal each other. You can set up the project to say revenue is equal to billing. So you would generate the invoice first, and then the revenue would be generated off of the invoice. You can see these are your two journal entries that have just come in from your revenue postings, and they've now booked in QuickBooks and they're booked in project accounting. I'm going to hark back over to this report here really quickly. The reconciliation report is very important. This is tying for a given period or selected periods. It's tying the project ledger to the QuickBooks general ledger. So when I run this report, it's checking to see if there's any variances between project accounting and QuickBooks GL. So if it finds any variances, it will show me this report that says, hey, I've got some variances here. We need to true these up. And what we always true up to the QuickBooks general ledger. So what it would do is it would make adjustments into the project accounting ledger to true it up to the QuickBooks. And if there are no issues, you would get this message here that says there's nothing to report. This concludes today's session. For more information, visit us at our website at www.nrtbusinesssolutions.com, or you can email us at info@nrtbusinesssolutions.com. Thank you for watching.